Franklin Templeton Investments, the fall of India's 9th largest mutual funds company. Hello and welcome to Inventiva. This is Palak Yadav presenting to you today's big news. Franklin Templeton Asset Management India Private Limited on Monday, 28 June 2021, got a breather with the Securities Appellate Tribunal staying the order granted by the Securities Exchange Board of India or SEBI. The order barred Franklin Templeton from launching debt schemes for 2 years. The ban on Franklin Templeton by SEBI came after an investigation that showed the fund house had enacted serious violations and lapses in managing shut debt schemes. SEBI has further ordered Franklin Templeton to refund the investment management and advisory fees together with the interest at the rate of 12% per annum, which amounts to Rs 512 crores. Along with this, a penalty of Rs 5 crore was also imposed on the asset management company. Franklin Templeton challenged the order by SEBI and stated that it disagreed with SEBI's findings. In the provisional order, the SAT announced that the fund company should not be debarred from launching any debt schemes, justifying the order by stating that Franklin Templeton was still managing 21 debt schemes and no complaints about those had come so far. The year when COVID-19 set foot in India was not an easy year for the already weak economy of India. Not a single sector had remained untouched by the economic devastation it brought along. Markets appeared to be in fear as uncertainty crawled worldwide. The pandemic sent the markets all around the globe falling to levels not witnessed since 2008, the year of the global financial crisis. Franklin Templeton is India's 9th largest mutual funds company. On April 24, 2020, it announced that it was shutting down 6 debt schemes: Franklin India Low Duration Fund, Short Term Income Plan, Dynamic Accrual Fund, Ultra Short Bond Fund, Credit Risk Fund, and Income Opportunities Fund are the schemes that the fund house decided to shut down. These schemes together had investor assets worth Rs 36,000 crores. This is almost the same number as 1/4 of the total assets managed by the company. The fund house, such a decision was totally unexpected and unprecedented for India. The last time India saw a mutual fund was forced to wind up a scheme was due to legal and regulatory orders. In 2018, Sahara Mutual Fund was ordered by SEBI to wind up all its schemes. But this time, it is different. Franklin Templeton, which is among India's top 10 mutual fund companies, has voluntarily chosen to wind up the schemes. Not only that, but side by side it also reduced the investments in 6 other schemes. These schemes were fund of funds and had investments in the schemes were shut by the company. A fund of funds scheme is a pooled fund that invests in other funds. FOFs generally invest in other hedge funds or mutual funds. As reported by Bloomberg, all 6 schemes that were wound up was managed by Mr. Santosh Kamath. He is a star fund manager and also the Chief Investment Officer for Fixed Income in Franklin Templeton. He is well known for helping in creating a market for buying debt instruments that are ranked below the AAA rating, the most secure rating for any private debt. Thus, Kamath's funds would invest money into companies that did not possess as good of a rating for their debt as the top 10 Indian companies. Consequently, they had to pay much greater interest rates to retrieve credit. These higher interest rates converted into greater returns for the investors who are willing to hold these instruments even though they are at higher risk if the companies fall to pay in time.